Today I have the pleasure of speaking with Randy Scott from Rare Element Resources. How are you today, Randy?
Good morning, Tracy. How are you?
Well, can I just start with congratulations on the announcement of your pre-feasibility study?
Thank you very much. We've been working hard on it for several months now, and it was time to get it out into the public and let everybody know all of the accomplishments.
One of the stories we published this morning said Rare Element Resources expects to be able to challenge China's hold on the rare earth market. So this is big news. Let's go ahead and start with the overall pre-feasibility study conclusions that you had. Ultimately, it affected your CAPEX, correct?
Yeah, I think that the big story for us is our ability to hold our capital expenditures down to what we consider to be a pretty low level for the marketplace right now in this business. You know, we've been very fortunate that we've been able to do that on the basis of, first of all, we planned to do it. We planned to put out a strategy that developed a low capital cost project. And we've been very fortunate because we've got a resource that lets us do that, and we've got a great location with lots of infrastructure surrounding us.
Well, one thing that jumped out to me was, of course, how you de-risked the project. Can you talk to us about that?
Well, sure. We start off with the capital expenditures. You know, that's a major de-risking factor by itself, is the fact that we've got a capital cost or initial capital cost below $300 million. The other thing that's happened over the last several months since we announced our proprietary technology, our process technology, is that we've gone through extensive pilot plant testing. Not just one, but several. So we have the results of those pilot plant tests, and they've obviously been incorporated now into the preliminary feasibility study. We've also been able to identify the high grade and delineate this high grade zone for the project, the high grade ore zone, and that's a major de-risking factor for the project itself now.
Well, something else that I know our audience is really going to appreciate. I noticed that you were very conservative on your rare earth pricing when you put this together, thus making it more economically viable. Can you talk to me about that?
Well, we think we've been fairly conservative on the rare earth pricing. We believe that there are major changes afoot, and that we hope we've seen the bottom of rare earth prices right now. We are watching carefully what's happening in China right now, and from my own personal view anyway, is that when the large companies in China can't make money and they're faced with rising labor and environmental costs, you know, that means something has to change, and we think that we've seen the bottom of those prices, and we're hoping that prices will continue to move up. We believe we've been relatively conservative in those price factors.
Well, I couldn't agree with you more, and of course your timeline. We got 45 years mine life, did I read that right?
You read that right, Tracy. All of the drilling and exploration that we've done now has resulted in what we refer to as a world-class critical rare earth district. As we've gone through the resource estimation now and in the preliminary feasibility study now, the detailed mine design that we stretched this out to about 45 years. But what's really important about that is that the first 9 years are at an average grade of 4.7% as opposed to the total resource, which is approximately 2.8. So during the first 9 years, and particularly during the payback period, we're going to be mining grades that are significantly higher in the average of 4.7 for those 9 years.
Okay, and because you're mining this high-grade core, which you were very, very good at describing in your news release,
thank you.
Your payback is 2.9 years as well.
Yes.
Okay. Can you explain that a little bit more? Because I know our analysts are going to be all over this.
Yeah, we're very happy about that, obviously, and it goes back to two things. First of all, the low capital cost. The second thing is this high-grade core that we talked about. We're going, as I mentioned, going to be mining at grades that are probably 50 to 100% higher than the average grade, and not just for a few years, like 1 or 2, as many mining companies purport to do when they say they're high grading. We've been able to extend it out for 9 years. But the fact of the matter is that when we start mining in those first 2 or 3 years, we're actually mining at an even higher grade than 4.7%. And that obviously all contributes to a rapid payback.
Okay, so I'm guessing this is why you're using the term critical rare earth, what did I see? Critical rare earths project instead of just being a rare earths project because of your grade. Is that correct? And
yeah,
the type of rare earths, or explain it to me.
Yeah, sure. That's, I mean, we've said this for quite some time. We want to try to differentiate ourselves from those that claim we were strictly a light rare earth producer. And you'll see in the press release and the announcement the distribution of the elements. We are heavily weighted towards the magna materials, neodymium, praseodymium, terbium, dysprosium. We actually have dysprosium and a fair amount of it, and it contributes significant value to the project. We're also either the top or the second highest grade europium deposit in the world. So those are the elements, those critical elements are the ones that contribute significantly to the value of the project, not necessarily in any quantity lanthanum and cerium.
Well, again, congratulations, Randy, and thank you for joining us today.
Thank you, Tracy. It's a pleasure.